The whole financial world is talking about a huge document that was found that puts the value of XRP at $32 per coin. The document is linked to BlackRock's head of digital assets. $32 is not a mistake. If you think that's just another random prediction, think again. It comes from a study co-written years ago by someone who now works for BlackRock, the world's largest asset manager with trillions of dollars under control and a front row seat to everything that happens in finance. Even experienced buyers sit up straight when they see something like this. This is not advice about money. This is the interesting part. You shouldn't miss it because the time couldn't be better. Let's go back to the BlackRock link. Take a step back and look at the bigger picture. In the past 10 years, crypto has gone from being thought of as nothing more than internet money to becoming the most exciting part of global finance. It hasn't slowed down even when there have been failures, scandals, or drops in the market. In fact, every time there is a bear market, more money is being put into the market. During those times, institutions, individual investors, and even whole countries quietly build up more. When the news cycle turns positive again, prices quickly catch up. That's where XRP comes in. The foundation for Ripple has been being built for more than 10 years. They didn't just put out a white paper and then leave. It was in some of the world's least served areas that they built real corridors, partnerships, and adoption. People in Latin America, the Philippines, and Southeast Asia use XRP to send money back home because it's faster and cheaper than other methods. When you think about global transfer, you can imagine a sector worth many trillions of dollars that affects a huge number of people every day. XRP is making a base that can only get stronger. Put that together with the timing now. The next Bitcoin split will happen in 2028. In the past, this event has been a springboard for the whole crypto market. But this time, things are different. Setting rules. Right now, big banks, governments, and Wall Street's biggest players are all publicly moving into this space for the first time ever. BlackRock didn't apply for a Bitcoin ETF just because they thought it would be fun to do so. They did it because it fits with how banking will work in the future. And if XRP is a part of their own fair value models, then we're no longer just guessing. We're talking about real convictions in prisons. Let's check out those numbers one by one. The study said that by 2030, the XRP system could handle anywhere from 190 billion to 500 billion transactions every day. That's really shocking. To give you some background, Visa handles about $14 trillion a year, or about $38 billion every day. If even the lower end of those predictions comes true for XRP's daily volume, we'll have a payment network that can compete with and sometimes even beat the big names in the industry. So the $32 per XRP number doesn't seem like a bunch of hype. It seems like math. There are 100 billion XRP in circulation, but only about 50 billion are actually being used. The study looked at the whole amount. They still landed at 32s, even though they used the full supply, which makes the value less optimistic. There could be even more upward pressure on the price if adoption speeds up even more, or if more XRP is locked up in reserves, staking, or institutional use. In the same study, compare that to Bitcoin's fair value. They thought it would be between $45,000 and $93,000 by 2030, which is already here in 2025. That shows that their structure wasn't just a bunch of ideas. Real estimates were used to build it about adoption, transaction volume, and network use. That's why everyone in the space should have paid attention when they said XRP is worth more than $30. Don't forget about Ripple's plans for a stablecoin coming soon either. Every time a trade is made, a small amount of XRP is lost. This is because stablecoins are supported by banks and other institutions. The system is hard-coded to work this way, and as the volume goes up, so does the burn rate. That puts a steady squeeze on supply over time, which is exactly what you want if you're keeping for a long time. And now for something really to think about. DARTs aren't what BlackRock does for a living. They don't just talk about a digital product unless they think it could be useful for their business. Take a look at what's going on behind the scenes. The $12 trillion swap market is being looked at by banks as a possible tokenization. Ripple has set up XRP as a payment asset for real-time liquidity. For CBDCs, stablecoins, and tokenized assets to be used around the world, a neutral bridge currency will be needed. Guess what works really well in that role? XRP. It's for this reason that price goals keep going up. Ripple and XRP have been the big quiet guy in the room for years. Bitcoin gets a lot of attention as digital gold. People pay attention to Ethereum because of DeFi and smart contracts. But in the background, XRP has quietly secured its place as the asset of choice for moving money around the world. Documents linked to BlackRock now say that XRP is worth $32. This changes the story. We no longer want to know if XRP will break out, but when. The best part is now here. This isn't about a hypothetical trip to the moon. This is about being useful. The price of a coin needs to go up so that hundreds of billions of dollars can flow through it every day by the end of the decade. This is how networks get bigger. That's how stages of settlement work. When the price stays the same, you don't get that kind of use. The market changes, there is more liquidity, value grows, and holders gain. That's what we've seen before. It wasn't just hype when Bitcoin went from $6,000 to $60,000. It was institutions moving in, ETFs coming out, usage growing, and the market adjusting to match. The same thing will happen with XRP as more people use it. The $10 mark is a big deal. The estimate of $30 as the fair value is a starting point. There is no telling what the real limit is once banks, money transfer services, and tokenized assets all flow through the XRP ledger at the same time. That's why times like these are important. All the parts of the puzzle are coming together to make one of the best chances of our lives. BlackRock is predicting that XRP will reach $30. Ripple is releasing a stablecoin. Remittance corridors are growing, and regulations are finally catching up. When we look back at how big financial systems change over time, there is always a point when the change is clear. Gold was the only currency for many years. Fiat monies were the norm back then. Now we're seeing digital goods move into the same area. No, not as a fringe idea, but as the basis for the next generation of world settlement. And XRP is at the center of that change. It's not just the $32 number that makes the BlackRock fair value projection so strong. It's also the way it's put together. They were not guessing. They were making maps of adoption paths, trade flows, and the overall usefulness of the system. Because they thought XRP would be used in banking systems and remittance corridors, they were able to figure out how much each token would need to cost in order to support that level of use. It's also clear that Bitcoin wasn't being too nice when you compare it to their predictions in the same study. They said that the price range for Bitcoin was between $45,000 and $93,000, which is pretty close to where we are now. If you look at that history, it's hard to ignore the $32 XRP prediction. Now, look at adoption through the lens of stories from real life. Ripple has teamed up with businesses in Mexico that handle money transfers between the US and Latin America. Those bills aren't small. A lot of money flows every year. In Southeast Asia, new routes are opening up where banks used to avoid opening accounts ahead of time because they were too expensive and risky. In a moment, XRP fills that gap. That's not just a guess. It's happening right now, and each new path that Ripple opens brings more value, volume, and liquidity to the XRP system. What's interesting is that acceptance grows very quickly. A single route between two countries might start out small, but as people see how it can save them money and time, it quickly gains popularity. Then, when liquidity gets better, bigger institutions are able to handle bigger deals. What starts out as a few $1 million can turn into billions. If you do that along dozens of routes around the world, you're getting close to the $190 billion a day that is expected to be transacted in 2030. That's why $32 doesn't sound like a crazy amount. It's not about crazy guesses or rounds of hype. It has to do with how networks work. For a digital asset to be the foundation of foreign settlement, it needs to have a price that matches the amount of money that needs to be moved. It's not possible for a token worth less than a few dollars to successfully absorb trillions of dollars in annual flows. You have to charge higher prices. Mathematically, they have to be there. The way this works has been seen before. Bitcoin's rise from a few $100s to tens of thousands of dollars wasn't just people guessing. As more companies joined, ETFs came out, and more people started using them, the price went up to meet the needs of the bigger players for more liquidity. Ethereum went in the same direction as DeFi and NFTs did. When a network finds real-world uses, the market changes how much it's worth. And XRP is even more likely to gain because it was made to facilitate global liquidity and cross-border payments. Regulation is another thing we can't forget. Uncertainty kept XRP's price low for years. The SEC lawsuit left a shadow, and many institutions didn't want to make a full commitment until they knew what would happen. But things are changing. The courts are making it clear that XRP is not a protection in and of itself. Ripple is getting licenses in a lot of places, from Singapore to Dubai to make sure that the rules are clear. As soon as these barriers come down, adoption on a much bigger scale can begin. Tokenization is becoming more common in the world's banking system. Things like bonds, real estate, stocks, and even digital currencies from central banks are becoming digital. Tokenization needs lines for settlement. It needs liquidity bridges that can work around the clock across countries and make decisions in seconds. Swift and other old methods aren't made to handle this. That's why RippleNet and the XRP ledger are set up to be the main ways that tokenized value is transferred. There could be a world where governments issue CBDCs, businesses tokenize their treasuries, and buyers trade fractionalized assets across blockchains. All of those tools will need to be able to talk to each other. They will need a neutral money to use as a bridge. XRP was made to do just that. There will be a lot of value in the payment layer that connects blockchains when trillions of dollars worth of tokenized assets move between them. That's not just a dream. It's already being tried out in pilot projects all over the world. So BlackRock's prediction isn't just about money sent back to the country. It's about the future of money in a wider sense. If XRP handles hundreds of billions of dollars every day, it means that everyone agrees that blockchain-based payment is the way to go. In other words, businesses, banks, and governments are moving money through the XRP ledger. When that happens, the price of a token goes up automatically to meet the needs of a global system for liquidity. One interesting thing about the prediction is how low it was. They thought that all 100 billion tickets would be used up. In fact, though, not every token will be used. A few will stay locked up in lockup. Some will never be found again. Some will be kept by institutions for a long time. That means there will probably be a lot less than 100 billion in circulation. In other words, the price of XRP would have to go up even more than $32 in order for the same number of deals to happen around the world. This is why some experts want XRP to be worth $100 or more, because the ceiling isn't set by speculation once usage grows and liquidity increases. It depends on how much output is needed. For hundreds of billions to move every day, XRP needs to get to a point where it's easy to move that much money. If not, gaps get bigger, slippage gets worse, and the network can't work right. By making liquidity pools bigger, higher prices actually make the network work better. Let's not forget about the psychological aspect. The crypto market loves stories. People bought Bitcoin because of the story that it was like digital gold. The idea that Ethereum was the base for smart contracts and DeFi made it popular. The story of XRP is based on its usefulness as the bridge asset for global banking. As soon as the market fully accepts that story, prices will change very quickly. It's happened before. As soon as Bitcoin broke $20,000, it looked like it would go to $60,000. As soon as Ethereum hit $1,000, it went straight to $4,000. In crypto, prices don't always move in a straight line. There was quiet stabilization, and then there was explosive repricing. Once usage rates reach a certain point, XRP is ready for that kind of move. There's also the matter of having a competitive edge. A lot of other projects have been following trends for years while Ripple has been growing. There were joke coins, short-term DeFi projects, and speculative tokens that came and went. But Ripple stayed focused on its goal, to change the way payments are made around the world. Now that long-term plan is paying off. While others go away, Ripple's relationships, regulatory wins, and technology stack are making XRP an essential piece of infrastructure. Institutions don't want to do tests. They want to be trusted. That's what XRP does. We're now back at BlackRock. Think about what they do. They are more than just a financial company. They make the stock market work. Their stamp of approval means a lot more than just shop speculation. If they think XRP will be worth $32 internally, it means they've probably thought about how widely it could be used, the risks of regulation, and whether it's technically possible. This kind of official recognition makes it possible for more people to accept it. There has never been a better time for BlackRock and its competitors to start giving their clients access to XRP. Demand could grow quickly, and BlackRock is the perfect company to do it. We're in the middle of the decade, and BlackRock's timeline goes straight to 2030. Between now and then, Bitcoin will be halved twice more, Ethereum will fully switch to proof-of-stake scaling, and CBDCs will be used in a number of big economies. There are changes happening all the time in the banking system, and assets like XRP aren't just side plays in that new version. They are important structures. So the real question isn't whether or not XRP can reach $32, but how quickly it does so once interest peaks. If the valuation is already high enough because of transfers, then adding in tokenization, CBDCs, and the need for global liquidity could make it much higher. As soon as momentum builds, markets move faster than expected. What you think is conservative now might seem ridiculously low in 5 years. That's why the neighborhood is so excited. There's more to it than just a number. It means that people agree that XRP's form, use, and positioning are all perfect for where the world is going. Any news, like a new corridor, a win with the government, or a relationship with a big organization, is like adding another brick to the wall. The value also catches up right away once the building is finished. One thing is clear when we talk about XRP's future. Now, the question is not whether adoption will happen or not, but how far it will spread. Ripple has built one of the most reliable systems in the whole cryptocurrency space over the last 10 years. Largest financial companies in the world are now taking notice of that organization. XRP has become a real-world settlement tool with relationships in Europe and the Middle East and trade routes in Asia and Latin America. The next step is to make these use cases available all over the world. As an example, look at the transfer markets. A lot of money is sent back home by migrant workers every year. Companies like Western Union and MoneyGram are very important to the present system. However, they charge high fees and make recipients wait days for settlement. With XRP, the same trades happen almost instantly and don't cost a dime. That's not just a small improvement. It completely changes a system that hasn't worked well for decades. People don't go back to the old method when they find a service that is better, faster, and cheaper. That's why adoption has been slowly rising in places where people send a lot of money back home. But that's not all that XRP can do. One of the most important things to understand is how Ripple fits into the banking industry as a whole. They're not trying to take the place of banks. They're making tools for banks better. Ripple solves problems that banks have had for decades by providing on-demand cash and faster settlement. Ripple has worked with banks like Santander and SBI Holdings because of this. They know that accepting the new lines is a must. This is the only way to stay competitive in a world that is going toward instant settlement everywhere. Now, add tokenization to the mix. Trillions of dollars worth of assets will move to blockchains over the next 5 years. Tokens will be used to represent stocks, bonds, real estate, commodities, and almost anything else that can be represented online. Things that have been turned into tokens will also need a way to move between blockchains, platforms, and countries. That's where XRP really shines. It doesn't matter if the government, a company, or a startup makes the coin. For value to move from one system to another, XRP can be used as a bridge. Because banking systems are broken up, this neutral role is very important. It will look different in the US and Europe. A government-issued digital currency will follow different rules than a stablecoin released by a business. These systems don't work together because they don't have an interoperable payment asset. XRP breaks down those walls. That's why Ripple has been working with central banks, not as a rival, but to make it easier for different systems to work together. Think about what will happen when the level of adoption hits a certain point. The daily settlement volumes in the traditional banking system are much higher than anything going on in crypto right now. But if XRP starts to capture even a small part of those flows, it will have a huge impact on the prices. To meet transaction demand, liquidity depth must also be high. This can only happen if the price per token is much higher. That's why BlackRock's model's $32 estimate of the fair value is so important. It's not about hype, it's about the math of availability. Think about how markets change based on usefulness. Ethereum's price went up quickly to meet demand when it became the core of DeFi and NFTs. It was the same thing with Bitcoin when it became the best way for institutions to protect their money. This is also how XRP's story is going, but with a focus on cross-border liquidity and tokenized payment. Global banking is an even bigger industry than DeFi or store of value demand, so the size of the problem could be huge. The effect of adoption on other people is something that a lot of people forget about. Liquidity pools are made when one corridor opens, which makes it easy for the next corridor to open. When one business uses XRP, it makes it easier for others to do the same. It's not a straight line. Adoption snowballs. That's why the next 5 years are so important. By 2030, we'll not only have remittance routes, but also XRP-powered settlement networks that are good enough for businesses. Finally, let's connect this to how markets work. Investors often act after the fact. They don't pay attention until prices change. Those who get in early before the story changes, though, stand to gain the most. It happened just like that with Bitcoin. For less than $1,000, most people didn't bother with it. When it got to $10,000, people began to pay attention. When it hit $60,000, everyone wanted to be a part of it. XRP is going in the same direction. The average investor doesn't fully understand its possibilities right now, but once usage rates go up and price changes back up the story, a rush of capital will come. This is another important reason for organizations. Individual people act based on their feelings, but institutions act based on plans. They see chances early on and quietly build up. Institutions are already set up when the public figures out what's going on. That's why BlackRock's own assessment is so important. It seems like at least some of the biggest players are aware of XRP's potential and are planning to use it in their long-term plans. Another factor that can't be ignored is the lack of resources. Less than half of the 100 billion XRP that are available are being used right now. The rest is either locked, held, or not available in some other way. Also, a small amount of XRP is forever lost with every transaction. In other words, the actual supply goes down over time, even though demand goes up. Lack of supply is a strong market force. It was one of the things that made Bitcoin rise so quickly, and XRP makes it so that there aren't many of them. When demand goes up and supplies are limited, prices go up even more. The price of XRP can go into the double or triple digits without the whole banking system being used. Getting even a small share of settlement flows gives enough volume to justify much higher prices. And because higher prices make it easier for more people to buy and sell XRP, they actually make it better as a global payment asset. Long-term buyers are very interested in this feedback loop. Once usage starts to spread like wildfire, once corridors get bigger, and once stablecoins and CBDCs start moving around the ledger, the repricing will speed up. And crypto history shows that things move faster than anyone thinks they will once momentum builds. When looking ahead, the timeline fits closely with changes in the economy as a whole. The next Bitcoin halving in 2028 will bring the whole field new attention. BlackRock's model says that by 2030, XRP could handle up to $500 billion a day. In that case, $32 for XRP is not only a reasonable price, it's also a safe one. The real number could be much higher, though, because it depends on how quickly adoption spreads and how much of the supply is locked up by banks and long-term holders. The story we're seeing is like that, a digital asset designed for international payments that is accepted by institutions, grows across remittance corridors, works with tokenized assets, and burns stock with every transaction. XRP isn't following a trend, it's laying the groundwork for the next generation of money. This is one of the best chances of this decade for people who can see the bigger picture. The market hasn't fully priced it in yet, but adoption and usefulness will soon cause a price change that surprises people who weren't paying attention.